Hi, my name is Akansh Mani, and I'm a 16-year-old pre-med student at the wonderful Ohio State University. And you might be wondering, why should I listen to you about stocks? You're a pre-med student. Well, let me answer that. I started investing about 1 year ago when the pandemic hit. I have stocks in companies such as Apple, Alibaba, Caribbean Cruise Line, and Delta, to name a few. This is the value of my trading portfolio as of today. Whatever money I get at work, I invest it into stocks. So today, I'm about to teach you how you can do the same. Well, with a twist. Today, we aren't going to be talking about a stock. We're going to talk about an ETF, an exchange traded fund. If you haven't heard of an ETF, this is basically where you give your money to a company, you invest it in the company, and the company's professional traders trade your money to give you profit, but take a small amount of commission off of the profit you make. So let's talk about this fund today. This fund, Vanguard Star Fund, is actually a daughter company of a bigger company called Vanguard, which we will get into later. So Vanguard Star Fund right now is $31.67, which is a pretty affordable share for a fund. So let's talk about the YTD return. This means that if you would have invested at the beginning of this year, you would have made a 21% return, meaning that 1/5 of your money would already be back. The expense ratio is what I talked about, the commission. This is how much commission they take from you, which is barely that much. So you shouldn't be worried about that at all. The Morningstar ratings and all these ratings down here determine whether a fund is a good buy. Since this is a 5-star, we know it's a good buy. Let's talk about what net assets are. You might be wondering, why should I invest my money in this account? And the answer is, this is the daughter company controlling $26.78 billion in assets. But this company, as I mentioned before, is a daughter company to Vanguard, which is the bigger company that controls $1.05 trillion in assets. So I think your money is very safe in this account. Let's talk about dividends. You might have heard of dividends before. These are basically loyalty payouts in which a company gives for investing. This particular fund gives you 14 cents quarterly per share. This means that if you keep one share for the whole year, you'll get 56 cents. 14 times 4, which is 56 cents. Which, this isn't a great, but this is a fund and a growth fund. That's why you shouldn't be worried too much about dividends. So let's talk about how you can make money off of this in the long run. So say you invest $40 every week for 20 years at investment return of 21.3%, the yearly investment average. You'd have $675,000. But say you say, I just want to invest for 10 years and then stop and then rethink. So if you invested for 10 years, you would have over $72,000, which is an amazing payout considering that you're only giving $40 per year. Now you might be wondering, how do I start investing in this fund? Well, there's multiple e-trading platforms which will be linked below. Most of the common ones are Ameritrade, Fidelity Investments, and Robinhood, which are the most popular. As I mentioned before, they'll all be linked in the description below. I don't want to advise you guys anyone to buy because I don't want you guys to be influenced by my opinion. Well, I'd like to shout out me, Kevin, and Jeremy for inspiring me to help people out. If for more stock videos, I would really suggest you guys to go follow their channel and view their videos. They're very intelligent people, and I consider them as role models. Again, I'll have their channels linked in the description below. That's all for today. Thank you very much for taking the time and watching this video. If you like this video, please like and subscribe. Thank you.